Welcome to this week's fund review. I'm Brian Williams from Northshire Consulting. This week, we're going to review the Vanguard Global Equity Fund. This fund was selected by the Facebook group, 401k and beyond. So, what we do each Tuesday is we pick a Morningstar category, we pick the 10 biggest funds in that category, and then we put a survey up where people can vote on which fund they'd like to see a more in depth analysis of. So, we do that each Tuesday. The voting closes on Sunday night, and then Monday for Mutual Fund Monday, we go ahead and post that video. When we talk about any fund, we always have to take a step back and look at the fund family that they're in. So, Vanguard is a group that a lot of you folks know. They've been around a long time. They're a little bit more well known for their index or passive approach to investing. Vanguard runs about 5 trillion in assets, but actually about a third of them, or 1.6 trillion, are invested in actively managed funds. So, the difference between an actively managed fund is you have a management team who's trying to pick securities, pick stocks that they feel are going to outperform that index or outperform that peer group. Whereas a passive fund or an index fund, you're choosing stocks that are based on a list. So if you think of the Dow Jones Industrial Average and their 30 stocks, or the S&P 500, those indexes that you see in the evening news or headlines on the newspaper, you're investing based on what that list has put together, and you're weighted based on what's in that index. Where here in this fund, you're invested in stocks that the managers are selecting. This fund, like a lot of other Vanguard funds that are actively managed, it's subbed out. So you have a couple different firms here, both UK shops who are running a sleeve of this portfolio. You have Baillie Gifford, which became part of the portfolio in 2008, and Marathon Asset Management, which became part of the portfolio right from the very start in 1995. So these two shops make up about 50% each of the portfolio. So in some ways, they're competing against each other, of course. They're also competing against outside advisory firms who would love to manage a sleeve of this portfolio. And what their job is to obviously produce outsized returns and keep their fees low overall for the portfolio. So when you look at how this fund is invested, this is a world large stock category fund. So the difference between an international fund and a world fund will be everything, US included, whereas international is everything outside of the US. From a style box perspective, the three rows at the bottom are small, medium, and then large at the top. So this definitely invests in larger size companies. And then left to right, you've got value. And then on the far right is growth, in the middle being blend. So you're invested in large size companies that could be either growth or value. So we always have to pick the one style box, but sometimes it's shaded in a particular area. So we want to look at how else more specifically how else it's put together. So it does become a little bit growthy. We've seen that style box previously. We've seen that in the large cap growth box before. We've also seen this fund does hold a little bit more mid cap funds than their peer group. So about 46 billion is their average size company that they invest in, whereas their benchmark is the index is about 68 billion. So a little bit smaller sized companies in this portfolio overall. So we'll talk about that later when we talk about how you can use this fund in your portfolio. A reminder that this video is just general education. Nothing shared in this video is to be considered specific tax, legal, or investment advice. Don't act on any information you see in this video or the Facebook group without first consulting your tax, legal, or investment advisor. We are an independent investment advisory firm with no affiliation to the review fund. We may or may not have a position in this fund with client assets. So this fund, as we said, has been around since 1995, with Marathon Asset being part of it the whole time. It's got about 9 billion in assets and close to 600 different holdings. It is actively managed, and the two longest managers are obviously part of the Marathon team since they've been there right from the very start. What we want to see here is we want to see a mix of the US and the non-US. Obviously, that's what makes it a global fund. This fund's weighting is a little bit more in the US than you'll see some of the other funds in the category. The other thing that jumped off the page at me here was the cash allocation, which is a very slim allocation. You have to have some cash in your portfolio to handle transactions. So, as new people put money into the fund, that money has to sit somewhere before it's being used to purchase stocks, and also something to process redemptions as people need money to pull money out of the fund. You don't want to always have to sell stocks just to fund those redemptions. So you have a tiny bit of cash here. This is a fund where you're not going to see the cash position grow to, let's say, 20% of the portfolio where somebody's making a market call. The goal of this fund is to stay fully invested as much as they can. When you look at the top 10 holdings, what's not on this list is Apple, which carries a pretty good weight in a lot of the other funds in this category. It's also about 4% of the benchmark index. Overall, this fund is a little bit underweighted in technology, although you might not notice that from the top 10 because you've got a few technology players in there, names like Google and Facebook and Amazon. You've got those tech players in there, but overall, it's about 13% of the portfolio, whereas the index, it's about 19%. And they make up for that on the financial services side, where they have an overweight to financial services. Some of that comes from Marathon, which is a valuation shop, so they're not going to chase overvalued tech names. So that's why you end up with a little bit of an underweighting there. Expenses, we always talk about expenses because that comes right out of your return. That's something that you need to overcome as a manager to beat that index or to beat your category. And this screen here points to Vanguard's philosophy that actively managed at the right price here. So when you talk to folks at Vanguard, they'll say, yeah, it's really hard to beat an index or beat, the category. If you're 1.5%, it's a little bit easier. If you only have a 45 basis point hurdle, you have to jump over. So the category here charges about 83 basis points. That's 0.83% or $8.30 for every $1,000 invested. Whereas the Vanguard Global Equity Fund charges 45 basis points, 0.45%, which translates into $4.50 for every $1,000 invested. So you're looking at a fund here that charges about half the category average. And some of that comes from the, Vanguard's purchasing power as a large player and having Bally Gifford and Marathon continue to fight for their business. And they're also always have outside managers who are trying to get in. You've had previously as much as four sleeves in here. You've had three. Right now it's just the two managing 50-50, but you could certainly see some changes there or see another asset management shop added to the mix. So when we look at that fund expense ratio, we say, okay, well, that actively managed fund, are we paying for some outperformance? So we compare that to the category. And yes, we are paying for some outperformance and getting it here. We've outperformed the category 8 out of the last 10 years if you've owned this fund. In the couple of years it's underperformed, hasn't been that big of a deal. You're not seeing dramatic underperformance here. Most years it's followed the category. So if the category's down, they're going to be down. If the category's up, they're going to be up. So you see it's in line with what it's supposed to be doing. It just outperforms the category. So that's a good sign. We always urge everybody to go right to the source for up-to-date information. We have no idea when you're going to be watching this video, but always go right to Vanguard.com for the latest information on this fund. They have their annual reports, their semi-annual reports, the manager commentary. You can pull off holdings. You can see a lot of the information we just went through here in a more up-to-date fashion right on the website. Same thing with Morningstar.com. They provide a ton of information there, both on their free version, also on some of the subscription packages they have. But always check them out for the most up-to-date information. This group, the 401k and beyond group, they get to vote on which funds get selected. So that's what they did here. So if you're watching this on YouTube, be sure to check out the Facebook group. And if you're watching this on Facebook, be sure to subscribe on YouTube so you can get some up-to-date information on some funds there. Not every YouTube video that we do, we post to the Facebook group. So you might find some additional content on the YouTube channel. Global equity performance has been really solid against the index as well. So that's that all country world index we talked about before. And similar to the category, it's beat the index 8 out of the last 10 years. So this is certainly a situation where if you held this fund and your neighbor held the index, you're definitely outperforming your neighbor. And the performance has been very consistent. Same thing. In down years, they're down. When the index is down, up years, when the index is up, they'll be up as well. But they're very happy that they've outperformed in 8 of the last 10 years. And like we said before, most of their funds actually have, especially in the longer term on the 10-year number. A reminder again that this video is just general education. Don't act on any of this information without consulting your advisor. Overall, we give this fund a B plus. Some of that comes into the risk metric. So it is a little bit more risky than the category and the index, only because it goes down a little bit in size. So small caps are generally more have more risky attributes to them than mid cap, and then mid cap has more than large cap. So that's the only thing that pulls it down a little bit here. The firm grade overall, we give Vanguard an A, and the returns have been very good. We give them a B plus. We would give them somewhere in the A or A minus range, but risk adjusted returns when you factor in where they are on that size spectrum does knock them down a tiny bit. So if you own this fund, how should you be placing it in your portfolio? So this is one of those rare funds that you could use on its own. What you'd be missing if you did that, would you be missing some international and some U.S. small cap exposure? So you could go out and find a global small cap fund to fill in the gaps, on those bottom three boxes. You're also going to have that growth tilt. So if you wanted to completely even out your style boxes between growth and value, you'd have to fill in that large cap value fund. You'd have to add a few more dollars into that bucket there. But this is certainly a foundational fund that you could build around. You could even pair this with an index, and that could be your total equity position if you wanted to. We never recommend anybody be in just one fund, but there are certain funds that, if you had a small IRA or something kicking around, you could certainly make a case for this fund being in the mix. So we want to thank everybody for watching. If you're, again, if you're watching this on YouTube, be sure to check out our Facebook group. And if you're watching it on Facebook, check out YouTube. It's Brian Williams from Northshire Consulting. Thank you.